what would happen if you invested $10,000 into YMAG, the Magnificent 7 dividend ETF from YieldMax that is now paying weekly? You guys liked the video on YMAX, which was the one I did recently, and so I figured I'd do one on this one too because the yield is also pretty insane. So we're going to go over a couple of things here. We're going to go over the fund. We're going to check out the website for YieldMax, look at the dividends, show the dividend calculation that I did to figure out the actual yield that we've seen since it switched to weekly dividends. We're going to go over the drip calculator and then throw all of this into a couple of calculations to see how much money you make from $10,000 invested. So I hope you guys enjoy. If you like dividend stocks, investing, don't forget to like the video and subscribe. Helps me out a bunch, and you join the community of some amazing people. I really appreciate all you guys out there. So what we'll do now is we'll roll the intro. Looking at the 1 year price difference for YMAG, it is down 5.5%, which is not bad at all. This thing has an insane dividend yield, and prior, even before it switched to weeklies, it had a really solid yield. Now it switched to weeklies, I think in August, and the first weekly was paid out in September, I believe, or something along that timeline. September 18 is the first weekly payout. So since then, it is down 2%. Now, I'm worried about NAV erosion just like the next guy, but I am happy to see this has traded mostly sideways. When you compare this to some of the other weekly dividends, especially the Defiance ETFs, which I have a full account that has all the weekly payers in them that I compare. If you're interested, I'll link that at the end of the video. But those ones are going down consistently, and the YieldMax ones are not. The last video on YMAX, I was really surprised because the return has been phenomenal, and I don't own it in my normal portfolio, but I might now. And spoiler alert, in our most updated version of the weekly paying dividend account, it actually, YMAG and YMAX have made the most money in the account, including Roundhill. So they have made more than the Roundhill funds, which really surprised me. So we're going to go into the YieldMax website and check out what the Magnificent 7 is. If you guys have seen any of my videos on any YieldMax funds, you've seen this website. I'm here all the time. I like it. It's nothing too bad. The distribution rate they are saying is 43%. I have it calculated a little bit lower than that, but this is just based off of the last payment. The last couple payments I think have jumped up a little bit. Now, what is YMAG? So YMAG compared to YMAX. YMAX is a fund of funds. It holds a ton of the YieldMax ETFs. YMAG is different. It holds 7 funds of option income ETFs, specifically the Magnificent 7, which is a really well-known grouping of stocks that perform extremely well. And I don't know if this is just for these stocks. I don't know if this is a name that has changed over time as different stocks have grown and such. But for now, these are the Magnificent 7 stocks. We're looking at Apple, Amazon, Google, Facebook or Meta, Microsoft, Nvidia, and Tesla. And so YieldMax has funds on all of those. And so this is those 7 wrapped up into one fund. And so this one does have a pretty decent performance history. The Magnificent 7, of course, you guys know Amazon alone is phenomenal. Tesla has been insane. So price appreciation wise, they do pretty well. And YMAG has done well. Like I said, my cat wants to join in. So just, you can always go on the website, check out the distribution history. We're going to go to Seeking Alpha to do that because I just kind of prefer it. But you can see investment objective, the fund's primary investment objective is to seek current income. They want to pay out. Net assets, I always like to look at this, is $182.5 million, and the expense ratio is a bit high, 0.99. Now, acquired funds and expenses, it might even be more now, 1.3 with excuse my cat, he's very rude with this. So it might be a 1.3, which is a lot. Yeah, gross expense ratio. I don't love that. That is more than I last checked. And I haven't done a video on these for a little while. So all in all, performance, we already kind of looked at that. They have it up 22%, which is insane. And that I'm sure is with dividends either, it must be reinvested because otherwise it wouldn't make a lot of sense. And then you can just look at all of them. Tesla, Meta, Amazon, Google, Microsoft, Nvidia, Apple, First American. This is like, I think it's bonds or something that they hold. So is that 7? That is 7. And you can see it's 13 to 14% for each of them. And then a few strays in there, cash and other. So not too bad. Let's jump into the dividend history or distribution history. I always say dividends, which is really, really important for these funds. Looking at the dividend history, distribution history, I'm going to say both. I'm probably going to say dividend because I like it better. We can see 20 cents, 17 cents, 16 cents, 28 cents, a phenomenal one. And then we continued down a little bit, 23 cents, 5 cents, and 15 cents. Now, I would explain why this one was so low, but someone commented and did really well, and I want to shout them out. John Pelot 2779 commented on the last video on YMAX saying that YMAG paid out 5 cents per share because Group C for YieldMax has only one Magnificent 7 stock and all others have 2 or 3. So the Group D week of YMAG will always be low. And now it is really complicated with how YieldMax does some of their stuff, but that is why. So they all are rotating depending on the dividends. And so you can't always have everything pay, I guess is one way to put it. Not a very good way. John put it a lot better. I don't know if John's his real name, but username. So I appreciate that. Thank you guys for explaining stuff to me in the comments. I love investing. I don't know everything, and I'm not going to say that I do. Anyone that does say they know everything, they're probably lying. But looking at the dividends, yeah, I mean, it's been solid. The price has come down a bit. And I think part of the reason is people were really pumped for it to go weekly. And before that, they were just kind of underperforming. I know that YMAG and YMAX had lower yields than the rest. With that being said, with my calculation, since going weekly, it has a 38% distribution rate, which is crazy. And the way I did this math, if you ever want to do it, and I recommend doing it yourself, you can even fact check me, is I took all of these numbers since going weekly, I added them together and then divided by the total number, which I believe is like 7. And then I took that number, I divided it by the current price of $18.79, and then I multiplied that by 100 to get a percentage. So 38% is pretty phenomenal. I'm really, really happy with that. And I was very, very surprised. Now, everything's probably going to be wrong on here. They have a 28% yield. Annual payout of $5.42, but everything has changed since going weekly. So what I'm going to do now, I'm going to throw it into a drip calculator, and that'll give us a little more information on how this fund has done since inception and see if it is up 22% like they claim on the website. DividendChannel.com's dividend reinvestment calculator. We're going to plug everything in for 10K invested. It does that automatically. And we can see YMAG, absolutely insane. Total return of 21.75%. So they had it, 22.4 or something like that. So not even a percentage off, which I think is good. They're being pretty close to realistic there. And an annualized gain of 28.97%, almost a 29% return per year. And that's just because it hasn't been trading for an entire year yet. So they're speculating that it's going to continue to trend in the same way that it has. Now, that is with dividends reinvested. With dividends not reinvested, you're looking at a 20% total return so far and an annualized gain of 26.54%, which is so interesting to me because when I talk about reinvesting dividends, normally there's a very large disparity because this has only been around for less than a year. The disparity hasn't had time to really grow, but over time, you would see that with a 2.5% difference. That would really make a lot of difference over a 10-year span. But all in all, YMAG has done phenomenally. I said from the beginning YMAG was my favorite, and that was because it was like an 11% yielder, and I was like, this one actually has the chance to just continue to do well. And since then, it's just boomed. So I'm really happy with this. I think YMAG and YMAX, again, are probably, both of them now are my favorite YieldMax funds. I get it all the time. Invest in MSTY, NVDY, all these other ones. And I'm not against investing in those by any means, but these ones they're a little bit safer. They have a larger amount of funds in them. And so I would rather buy YMAG than buy all the 7 individual, especially if, one of the individuals drops. It's a little bit safer in my opinion. And I think in the long run, it'll be good. So that being said, let's jump into these calculations and see how much money $10,000 gets you every single year in dividends. Using MarketBeat's dividend reinvestment calculator, I'm going to do 2 different calculations. So everyone, hopefully this makes sense. The first one I'm doing based off the annualized return that the drip calculator gave us. This is going to be before it was weekly and since it's gone weekly. It's going to be the whole accumulation of what the fund has been paying. The second one I'm going to do is going to be just based off our weekly percentage. That one's a little bit higher. And the reason I'm switching it up is because since going weekly, the funds have been doing better. And so it might be a better, I guess you could say, assumption of where it's going to go. I'm not saying that that's true. It's not financial advice. I hope you guys know that. But still, I think that's a good idea to look at it since going weekly because it really changes. Not only does it change the attraction of the fund to people that want to buy it, but it changes your frequency of distributions that can change your compounding. So it does make a difference. And especially over a long period of time, which we're going to look at, it makes a big difference. So checking in, starting with $10,000 invested, that gets you 532.18 shares. And I didn't do that mentally, just so you know. Our ending balance ends up being $13,360. Now, because we're dripping, And everything else I removed, right? So we're weekly, drip is on. Annual contribution, it should be 0. Whoops. Annual contribution is 0, 1 year invested, and the yield based off of the drip calculator. Now, yeah, that didn't change much. So we can actually see that our annual dividend income is $4,471, which is crazy. Absolutely crazy. And so what we'll do is we'll kick this up to a few more years. And now this, again, guys, this is all an assumption that the fund continues to trend sideways. I didn't include any dividend increases. I didn't include any dividend decreases or price appreciation or depreciation. This is just based off of the return we've seen so far. So is it going to do this exactly? No. The chances of it are super, super low, but this is just something I like to do to speculate what could happen. And this may be closer to a best case scenario. I don't know. I don't know what they're going to do, but I think that going weekly was a really good idea for them. So calculating 5 years invested, your ending balance is $42,396. So you have a 4x return on your 10K investment. Annual dividend income is now $14,000. So within what, year 3 or 4, you're now making in your dividends everything that you invested primarily. So you could actually, in theory, pull out your initial $10,000 tax-free. Yeah, you can do it tax-free. I'm not a tax expert. Don't think that I am. You could pull that money back out, use it somewhere else, and continue growing because you're playing with the house's money, how they say it. So I think this is absolutely phenomenal. And then jump up to 10 years. Immediately, an insane jump up to $180,000, just under that. And now your annual dividend income is what the average American makes every single year gross. So $60,206, which is insane. All the dividends you've made so far are $146,000, which is just wild. We're just going to go straight into 20 years. At 20 years, you have $3.2 million as your ending balance. Your annual dividend income is $1 million because you're near a 30% yield. And your total dividend payments over 20 years is $2.7 million. I can't believe it's that huge. We're going to bite the bullet and jump straight to 30 years. Now, I like to throw out this scenario. Let's imagine that you are 25 and you want to retire at 55. You invested your first couple of paychecks that totaled 10K into YMAG, and you let it ride, and it traded sideways. You would end with, holy smokes, I didn't think it was going to be that big. My mental math was way off. $58 million. Total annual dividend income is now $19.4 million, and your total dividend payment over 30 years has been $50 million, which is just crazy. It's absolutely just crazy. And so I'm blown away by this one. So what we're going to do now, we're going to plug in the other numbers and see how much of a difference it makes. But remember that our ending balance is $58 million. Okay, I'm not going to repeat myself with everything. I've swapped it out to my calculation. So this is since it went weekly. We have a 38% yield. So this is obviously going to be more, and I am excited for it to be more, but $58 million was our ending balance. So now we can see with this one, we've already seen a bit of a difference. 38% yield over the 1 year period. You have $14,600 in your account, and you're making $6,700, which is crazy. 5 years, again, assumption. After 5 years, you have $66,000. Your money is just compounding over and over and over and over and over again because we have drip on. Okay, so that's why it's just crazy. It's what makes the difference with your dividend payments versus the ending balance. $66,000 gets you $30,500 every single year in dividend income, which is crazy. It's gonna get so crazy. $440,000, almost $441 after 10 years invested with just 10K. You are now getting $202,000 every single year from the dividends, and your total dividend payout is $355,000. I really like the power of these funds if they can pay these out, and I'm not saying that they will. I promise you that I am not. I don't know what they're going to do. I love knowing what you guys think. Do you think YMAG is better than YMAX? Let me know in the comments because I want to know what everyone's thinking because sometimes it just seems way too good to be true, and it might be. Usually it is, but sometimes you don't know. There's been some crazy stories. So after 20 years, ending balance is $20 million, and your annual dividend income is $8.9 million. $8.9 million. $20 million is more than some people see in their lives. And you're making that in 20 years invested. And then your total dividends over that time, $16 million. So back to our scenario, you're 25, you invest 10K, you're 55, you want to pull that money out, and you're at $856 million. Weren't we at 60 million with the initial? That's the power of drip. That's why the weekly drip is so significant with these funds, guys. I am ecstatic that we have weekly dividends. Total dividend payments over the 30 years, $707 million paid out to your account. And your annual dividend income is now just under $400 million a year. Let me know what you think in the comments, and I'll see you guys in the next video.